David, can you share some background on the role of surplus lines in insurance?
Surplus lines is often referred to as the safety valve of the insurance market. Licensed insurers always have first run at any risk, with certain exceptions. But when licensed insurers won't or can't cover a risk, that's when surplus lines steps in. They take the crumbs off the licensed company's table, in effect.
What are some of the new types of coverage being written in the surplus lines market today?
A few categories of risks are often insured in the surplus lines market. New or evolving lines of coverage. For instance, cyber insurance was once new back in the late 90s, and it was written in surplus lines. But it's a constantly evolving risk. So while the licensed companies have made some forays into covering cyber risk, the constant dance back and forth between hackers and what they can do and how they can monetize their hacking efforts, and the people who are trying to fight them, and the insurers who are trying to cover that risk, that is a constantly evolving dance between those players. And so the coverage is constantly evolving, and surplus lines are the ones who are usually nimble enough to modify their coverages and make new coverages quickly to respond to changes in the market.
For those insurance regulators concerned with solvency, how does the surplus lines market compare to the admitted lines market? We'd appreciate your perspective there.
The overwhelming majority of surplus line premium is written by domestic professional surplus line companies that write 50% or more of their premium on a surplus line basis. And all these companies, as domestic companies, they're licensed in some state and regulated by that state where they're domiciled. That state is going to be doing market conduct, financial solvency regulation, and making sure that that company is operating in a financially sound basis and being fair with the policyholders.
Can you talk a bit about the regulatory landscape around surplus lines?
On the license side, regulators are always regulating forms or the content of the policies, and sometimes rates as well. That is typically not happening with surplus line carriers. That's what enables surplus line carriers to design and price their policies in such a way that they're able to pick up those risks that the licensed companies will not or cannot cover.
Are U.S. domiciled surplus lines insurers subject to regulation by their domiciliary states? And can you compare and contrast that with non-U.S. domiciled surplus lines insurers?
U.S. domiciled insurers are subject to all the regulations of a licensed insurer in their domiciliary state. Non-U.S. based insurers, non-U.S. domiciled insurers, often have to enter the U.S. market by applying to the International Insurance Department of the NAIC, and they have to qualify under their regulations, and then the IID places them on the quarterly listing of alien insurers, and under a federal law that grants them eligibility in all 50 states.
Given what many observers describe as a challenging risk environment, do you foresee continued growth in the surplus lines market?
In the last 10 years, there's only been one surplus line insolvency in the domestic professional surplus line segment, whereas in the licensed insurance market, there have been 176. So I think the surplus line market compares pretty favorably now on a solvency basis to the licensed market.
David, has the surplus lines market seen growth in recent years? What does that look like?
There's been growth in the market overall. It's kind of a hard market right now, and when a hard market happens, it causes growth in the license side, but it causes exponential growth for surplus lines carriers, because not only is there more disciplined pricing in the marketplace overall during a hard market, but now licensed companies are tightening their belts and accepting fewer risks. So more risks are flowing to the surplus line market at a higher rate. So the growth has been considerable.
What are some of the new types of coverage being written in the surplus lines market today?
One of the most recent ones is certainly cannabis. Cannabis is a line where things are only recently becoming legal on a state-by-state basis, and there's still quite a bit of uncertainty in the financial markets, and that includes insurers, about how legal it is for them to cover it. So there have been a limited number of insurers that have been willing to step up and provide coverage in that arena. And that's one of the new ones that have come up. A little less recently, transportation network companies like Uber and Lyft that have become so popular over the last decade. The very first insurance policy for them was written on a surplus line basis, because while it is generally auto coverage, it's very different than just a personal lines policy that covers the car 24 hours a day. This one has to kick in and kick out depending on whether they're using the app or not using the app. So underwriters had to get creative about how to implement that, and that's the type of thing that often happens in the surplus lines market.
Given what many observers describe as a challenging risk environment, do you foresee continued growth in the surplus lines market?
It's always hard to make predictions, especially about the future. But in certain areas, I can see the typical market cycles kicking back in to where the admitted market will come into the space and start taking more of these risks and hinder some of the surplus line market growth. And that's what's supposed to happen. On the other hand, there's certain lines and areas that are going to continue to be challenging for sure. You can see the market on the admitted side withdrawing from any properties that have exposure to catastrophes, hurricanes, windstorms of any kind, flooding, wildfire. These are going to continue to be challenging because those risks are not receding. They're getting worse. And that's going to continue to be a big driver of growth for the surplus line market. Cyber, I think, is also going to continue to be a driver of growth for the surplus line market. That risk continues to evolve. The players on the bad side keep coming up with new strategies that require new strategies from insurers. So that's going to be another driver for surplus line growth in the future as well. So I think it's going to be a mixed bag.
For legislators and regulators interested in learning more about surplus lines, where can they go to educate themselves?
The Insurance Regulators Education Fund, IREF, together with the Katie School of Insurance and the Institute's Griffith Foundation, put on an annual regulator school that does a great job of educating regulators on a whole broad spectrum of insurance-related industries, including surplus lines. It's a great resource for regulators, and so it's a great opportunity to learn a lot about the regulatory job and what it entails over a period of about a week.
David, are there resources available to folks who want to learn more about the surplus lines market? We'd appreciate your thoughts.
State stamping office websites talk a lot about surplus line insurance and what it does. There are some law firms that put out 50 state reviews of surplus line laws that if you do a search on the web, you'll easily find those. And the American Bar Association periodically publishes annotations to surplus line statutes across the U.S. That's also a very helpful resource.
David, thank you for visiting with us.
It's been a pleasure.